Good morning, everybody. Mike Vacchi, PrincetonTrader.com here for NTMarkets.com with your Thursday morning pre-market webcast. Okay, S&P 500 E-mini futures daily chart. Thank you for everybody for who came out to the webinar yesterday after the close. We set another new record for people that were out at the webinar, so that was great. And we're going to do it again next week. Next week it's going to be on Thursday. I already tweeted out the registration. It's going to be Thursday after the close, same time, 4:45. We'll do it for about 45 minutes. So if you haven't come and checked one out yet, the recordings are all up. Check out the recording, and we would love to see you next week. One of the things that we talked about a lot yesterday was 48 to 50. What we've been able to do, or the bulls have been able to do overnight, is to get through that big area. 1950 has been a gigantic problem for the bulls all week long. So they've finally been able to get through that area. And the key today is going to be maintaining 48 to 50 as support. If 48 to 50 survives the day, then what we've got here is, and it's got to survive the whole day. The bulls can't let it turn into another one of these, where they walk it up in the morning and then the bears kill the close. If they're going to have a multi-day bear market type rally, they need to keep the pressure on the bears. If they're able to do that, then by definition, the lower band ride is going to end. We haven't interacted with the lower band today. You can see it down there at 1893. We've taken out yesterday's high up at 43.5. So that's all done. I think back to October of 2014, and there was a moment in that sell-off where we thought we were done as well. A lot of people did. We went up to what at that time was the middle band. We're a lot farther away from the middle band, obviously, and I don't expect at all that we would trade up to there today. But when you thought the band ride was over, the bears did do a reversal on that day, went all the way back and tagged the band. That's why the most important thing for the bulls today is to maintain the pressure, the upward pressure, and maintain that old resistance area of 48 to 50. Maintain that as support. If it had failed again, and it tried to fail last night, about 9 o'clock, it went up and did 50, pulled back fairly deeply. It pulled back as deep as 34. That was where the bears really needed to solidify 48 to 50 as a ceiling. We talked about this in the webinar as well. We've been talking about floors for a couple of years. If the bears are going to have control of the tape, we're going to have to start talking about ceilings. And that's just resistance that's tested on a multi-day basis that ends up being the springboard for the next leg of something. Whether that's in an uptrend, that would be a leg up, and a downtrend, that would be a leg down. So the bears missed an opportunity, in my opinion, last night to really establish 48 to 50 as a ceiling. If we were waking up trading in the 30s with another 20 handles off of very established resistance, I think that was something that the bears certainly could have run with and put in another decent day. So as long as that area maintains itself as support, the bulls have something to work with. The weekly pivot this week, I mentioned this, and I got laughed out of my own room on Monday. The weekly pivot is 2013.30. Just about every week in calendar year 2015, price has found a way, no matter how high or how low, to interact with the weekly pivot. The bulls have 2 sessions. If this is truly a multi-day bear market rally, the 2013-30 weekly pivot is attainable. It's about 50 handles away. And in this type of volatility, we've seen rallies of that nature. We're due for a low range day. We are due for a rest. We're due for a choppy day. If that day starts to play out, you'll see it start to get range bound. You need to not trade it as though it's Monday or Tuesday with gigantic ranges. You will get chopped up, you will get frustrated, you will lose money. If it ends up being a lower range day, you're going to have to either adapt or leave it alone. But that lower range, lower volatility day is coming. The market has put in a lot of work the last few days, and the last 4 or 5 days if you count Thursday and Friday of last week. The market's tired. We've been putting in some big ranges. We're due for a small range. All right. Everybody, have a fantastic day. Follow us on Twitter at Princeton Trader. Check out the website, princetontrader.com. Recording is up from the webinar yesterday. Whether you were there or not, recording's up. Check it out. It's about 45 minutes long. Come check out the chat room. Lots of new people starting. Lots of people in there learning. Lots of people becoming full subscribers. Come see what we're all about. If you trade this stuff all day, we would love to meet you. And we'd love to see if we can try to help you become a better trader. I'll be back tomorrow morning with another webcast. Trade them well, everybody.